Good morning. So update yesterday. I didn't watch the timing of it. If anybody did, maybe it was on that ISM data, which came in super strong. Charts up here. And that may be the reason why interest rates they were starting to go up yesterday. Have to keep an eye on that. This is bonds, 30-year bonds. Let's look at the 10-year, which is more widely followed. And there was a reversal day where it started to move up and flip back down. I suspect on the news, you have to look at the timing of that, maybe when it came out. In any event, where's that is on my 65-minute. Okay. So markets are they up a bit here? I think the NASDAQ was up. PLTR, I think, was up a lot. And look at how much, but I know it was up. But bonds keep dropping here, which means interest rates are going up. They're inverse. There's the 10-year, and there's the reversal from yesterday. So I mentioned this before, these interest rates go up based on either inflation or expectations for growth. And that ISM number was really good compared to what was expectations were. So there's a balancing act between how high interest rates go based on growth versus competition for equities. But so far, based on yesterday's reversal, you can see the S&P chart over here, kind of scrunched up there with the breath. But it's a big wide range bar, big up day yesterday, which is supportive of it going higher. And it better not break below that low because that is unexpected, would be a shock. And that's what shock patterns are based on. You can see, we'll get on the S&P on a bigger chart, but those big wide bars like that, just like with this one, breakout, pullback, and reversal, pattern says it's going higher. So any move down below here would be the unexpected because these patterns are formed by what other people are doing, what they believe. So gets pushed up based on a belief that yields are going higher, right? Bonds get sold, yields go up, and look for that to continue. As I said, the further these go up, that balancing act as to, well, it's not a big deal. It's going up for the right reason, increase growth, and well, they don't go too high. So we'll see how the markets deal with that and how much they continue to move higher. And so S&Ps, are they going to break out? These are the futures, and they're just up there. Futures traders are still kind of, the intraday super bullish. Is that reversal back up into resistance? Not bullish enough to take it above the highs yet. We'll see what it does. But as you can see, it's right up at this resistance area. And so far, going sideways. And that's positive. The move up created, right, a void. Many often say, well, I don't get this void thing, this word you use, Greg. Well, just what's the meaning of a void? There's a lack. There's something not there, right? A void. And so when prices move with that kind of momentum, there's a lack or void of support underneath it. And when it goes sideways, creates pivots, that's positive, especially when it's at resistance and it implies that it's going to go higher. But if it breaks below the lows, there's very little to stop it from going down. Being said, we have our guidelines. Does it stay in the upper half of the wide range bar? So if it's going to pull back today, if it's going to pull back, and it should stay in the upper half of that reversal bar. Again, these are futures. Primarily want to apply this thought process to the S&P 500, SPY, or SPX, the middle of the range. If it does dip down, we'd like to see bottoming tail bars. In other words, we're looking for confirmation of what preceded the current price action. And let's look at the cues. Not as enthusiastic, but it's still a wide bar, up a little bit here near that high. Notice the breakout and the sharp move down. There's been a lot of whipsaws. You can see on the 65-minute chart, the momentum move. So far sideways at resistance, that's positive. And we'll see if it can break out to move to the next resistance area. Compared to the S&Ps, this is more attractive because it has a little void above. And on the daily chart, the Russell is the strongest. That nice, strong move. Reversal day yesterday off of the 50 MA. So far sideways at resistance. It's got this congestion there. So while the daily chart is the best looking, intraday is not the best looking, meaning it doesn't have as clear a void. It doesn't mean it can't get through these highs. It just means that if you find something else that there's nothing there, theoretically, it has a greater potential to go higher. Right? So does that mean it can't? It just means it's probably most of the time going to chop around sideways there a little bit. And because it's in an uptrend, rising 20, rising 50, rising 200, and there's got to be a 100 there. You can see the blue line on the weekly chart over here. That's the 100 MA. There's a 20, but equal to the 100 on the daily. And so that's down there. It should not go down there, based on a reversal day like that. The Dow, big day up, the least attractive with all of that congestion over there to the left. Right. So let's check the gaps. Just gapping up above the highs. You see the 65-minute there. Just when the cursor is near that high there. And you see the way it came down is what created that void concept. So it isn't the most attractive on the daily. What we would prefer, we don't always get what we prefer, right? But having an inside day today, building a stronger or a longer base would be the proper thing to say, longer base going sideways and then up, which confirms that there's still strong demand after a move up like that. So that doesn't mean it could go up today. What's going to drive it? We'll see. Shall see. IWM. You can see the 65-minute is in a downtrend. Lower highs, lower lows, but a strong move up. Congestion there. So again, repeating, the ideal scenario would be a consolidation day. If it dips down, it forms a bottoming tail bar. And this is what bar by bar analysis is about. It isn't about giving names to candles like piercing patterns or Haramis or so on and so forth. When you apply bar by bar analysis and put it in the context of multiple time frames, you get a much clearer picture of what is factual picture, not subjective pictures based on indicators. So what does this imply for today? It implies the cues could go higher, a small amount, most likely, unless we get some news that drives things. And these are going to have to deal with the congestion areas. And that based on yesterday's price action, there should be buyers on dips. So SPY, overall, a lot of running in place, buying on dips, bottoming tail bar. It was that big down day and the inside day, and yesterday's up. And now it's got to deal with this congestion there. Or break out. Go ahead. So far, you can see it's going sideways at resistance. There's your big move up. There's your void below. Congestion, a a little apprehensiveness to take it higher, consolidation, maybe a bottoming tail bar, that would be supportive of going higher. What would not be supportive of it going higher? Apply bar by bar analysis. Common sense, right? If we have a day like this today, clearly something went wrong. All right. So SPX, let me get the. So based on what I said, it's unlikely it's going to go up there today. Yesterday's number just marginally got touched. Remember, these are the extremes that we come up with on a day-to-day basis. Average true range now, remember a few days ago, it was around 40 something. So ranges are expanding, 70 points, probably put it close to there. But with this resistance to the left, having made a pretty sizable move yesterday, it lends more toward a bias of consolidation, considering things are at resistance there. So we'll see. It's in no way should it go back down to yesterday's low because, as I said, just charts don't support that. Something would have to go wrong to send prices all the way back down there. So there's your put strike for today. It's above. This came up like 100. You know where yesterday was, but it came up over 100 points. So there was a huge shift in sentiment on those options based on what they were yesterday. And this did not come up as much, but it did go up. All right. Bitcoin. It's kind of like, I don't know, stable, but it got a hell of a clobbering. It's like a dead fish out of water, unlike gold and silver that have popped up after the clobbering they got. This is just sitting there. So buyers are not all that enthusiastic, but it's not dropping either. So a drop like this, if your expectation is that maybe this is overdone and can go up, same story. Some sideways consolidation, building a larger intraday base with evidence that it's not dropping. Evidence it would be clear that it's not dropping the longer it goes sideways, or if you apply bar by bar analysis, if it dips down and forms a bottoming tail bar, that would be supportive of it going up to fill the gap. But we'd like to see the daily chart have another day of stabilization, and that would give greater confidence. So 1 bar on the daily chart, you get a whole bunch of bars on a 65-minute, and of course, a whole bunch more on a 5 or 15, and applying that bar by bar analysis to that would support higher. It can hold there. Now, the opposite is also true. What if it pops up and it gets slammed right back down again? For example, it comes up to the area of this point right here, and it forms a big down bar. Right? So, day reducer, you're talking in there. I haven't decided yet, figuring out following the time frames. I don't use 15-minute that much, Brett. Dan likes that. I prefer the 5, but it's just a personal choice. Now for intraday trading, if you like, and well, for any time frame trading, if the time frame you're looking at becomes a mess, lots of overlapping bars and tails and so on and so forth, then we go to a higher time frame. You compress the data, so it makes sense. And you should, I'm reading your comments there. You should not increase, regardless of your account size, you should not increase position sizing until you increase your skill to read the charts. But again, understanding multiple time frames and bar by bar analysis will go a long way to doing that. All right, we talked about interest rates. We looked at SPX. Gold is up a bit, and 5,000 probably going to be a point where it hits its head on a little resistance since it's a whole number. Silver, not bouncing as much, but stabilization. So we'll be keeping an eye on that. Oil is up a little bit. That got clobbered yesterday. And other than that, you know what? Look at things that have already pulled back that might find some money rotating into it. Like financials are up against a little resistance there. You can see how they're coming down a bit, but stocks that have come back towards support and beginning to build that new support area. I know it's not the greatest. It's not like it's in an uptrend, like, pattern like this to go higher, but it's the kind of thing that buying pullbacks usually would work. All yours, Dan.
Good morning. Yeah, silver. Alex and I bought it together yesterday. I'll show you where. And I was watching it all day long. So it was stabilizing. And it was right here. 15-minute chart, higher low, little inverse head and shoulder. And right there, we bought it. And I actually just sold mine right under this little green bar on pre-market. Sold it at 79.60. Alex said he did SIL. I like my SLV 15-minute pattern better. Thomas XLF. Yeah, Greg just said that. Yeah, we should scan. We have a put spread in JP Morgan. Looks similar. Made the turn. In a downtrend on the daily, but we're trading the bounce. Here's JPM. This, I wouldn't buy this one, but we did a put spread on Friday. Or Thursday, rather, right here. WG. It's an ADR with all the gappers, PLC. But nice closing breakout, sure. Looks like all-time highs. Sure. Other alarms. Viking yachts we bought yesterday. Oh, nice bear sandwich, closing breakout, all-time highs. Looks great. It's actually a river boat cruise. HL Gold. I was watching this. It's gapping over the entry, so I'll watch that on a pullback. Weekly, monthly are cooked. Look at this. I know Greg doesn't like the term core, but I do when it lines up daily, weekly, monthly with a void. And I look at that wide range closing breakout, multi-year consolidation. That was a core trade. Now you get in, let's just say $7. Man. So I don't think it's going to make a new high anytime soon with a deep retracement, nasty reversal weekly. But it's a buy set up at the 50. But we need a pullback now. Walmart, we had a nice trade yesterday. Buying call options, made a huge percent on them. FBIN, buy setup. Now we don't have a potent turn yet, so I wanted to get above Thursday's high to feel confident. So there's that. Buy setup weekly. And that looks like all my alarms. Let's Oh, yesterday I saw some of these mineral stocks and I read about it in the journal. Like Trump's trying to stockpile mineral stuff. And I scanned a bunch of them, and amazingly, there's no good patterns. So it's not reacting to that news like it used to. But if any of you have a a good mineral stock, uh, it's in vogue right now. Let's go to earnings. Oh yeah, see, there's US Cellular from yesterday. Where are my earnings? Wow, I gotta clean all this out today. Ah, Schwab's on our list today. Closing breakout. That I like. I'm gonna put that in a window. That looks great. All right, PayPal. All right, here we go. Here's earnings. Merck. Hmm. Opening down a little. Maybe we get a 1, 2, 3. Pfizer. That's a bearish gap all the way back down here to the 15 of interest. ETN 345. And bearish gap. Maybe a condor for Friday. 1366. I don't like trading $1,000 stocks. The spreads are going to be wide, but that's a bearish gap. That's a closing breakout. That's worth watching. 30-minute high. EPD 33.55. It's gapping right there. So no pattern. Mess. MPC is oil. 180 and change. I'd say 30-minute high put spread or condor. I mean, look at this tail, tail, tail. You got 4 tails of rejection. And then you got support. So that's a condor idea. AME gapping down 224, no pattern, but strong uptrend at the railroad track. $1,000 stock again, but bullish all time frames. All right, PayPal's on my gap and snap list. Down a lot, and now you're gapping down over $9. But look, it's still bearish. So ideally, it sells off some more, another 10%. Who cares? The more the better. But I have that bottom right. And we'll be. I have a bad tip. I don't know. You mean right here? Chit. Chit looks like chit. Spider Daily. Yeah, I'm sure do. Oh man. Man, I wish they had software to just to get rid of those on their own. ADM capping down $10. That's fair. That's a commodity. 60. Wow, that's a big ugly gap. We'll come back to it. Weight Watchers doing nothing. I don't see anything, but it's kind of a bear flag. M top, kind of a monthly, so we'll come back. Up down 37, 458. A little bit above the 50, but no pattern. BR 202 would be a put spread if there's any juice. Overlapping bars, I don't like patterns like that. But it'd be a call spread with the gap down. ATI 128. That's bullish. Let's see how it retraces. Ball is another breakout. So that one's a little more excessive. But that's bullish. Galaxy, 25 bucks. And we'll come back. Look at that M top right there. IT. Wow. Okay, here's another gap and snapper. Wow. You're down from 236 and now you're gapping down $50, 45. Wow, that's pain. So those are my two gap and snappers. Now I like when they sell off into the market open like this. This one, I prefer it I prefer it to look like this. Helene rounding, Alex, that's a rounding top. You were asking yesterday for an example, and it's retraced in a sloppy manner, so I got no interest. Inger, gap down, call spread if there's any juice, rhythm, excessive gap, gap and down. Oh, Inger, that's yeah, call spread. SR is a bottoming pattern. If it opens flat, 82 put spread idea. Put spread, Friday's low on Mitzi. Those are down $7 though. That's a gap breakdown. That looks bad on time frames. And this I'm done with earnings trades. Got 2 minutes to go. Google gapping up, but it has earnings this week. Netflix at the low. Plug. No, I don't like that as a short. Thomas, why? Well, there's no pattern, number one, but number two, top of the range to the bottom of the range, greater than 100% retracement. I mean, unless you find something on the intraday, but I can find so much better. Netflix and the Fang, I see it. Now that's a better short. Look, here I have a pattern. I got a bearish continuation, yesterday's topping tail, and a bearish pre-market. That is a better short than plug. Microsoft still weak. I did personally, I did not, but yeah, that's better too, Thomas. You know, you got support over here, but that's bearish price action at the 20, it couldn't bounce. So Google, we have earnings tomorrow, and Amazon on the 5th, so that's Thursday. But that would be a fantastic put spread if it didn't have earnings. The gold silver we know about. Hilton Hotel here. We're short, still looks lower. Now that's a better short too, Thomas. Look, we're already in it, but that's a better 4 to 5 minute low. If you're so inclined. Devon, I forget, but oh, they bought a company. But daily, weekly, monthly are holding pretty well. Adobe got a downgrade. Nothing to do there. The cake is on our list over this topping tail bar. Boeing CE or this legal officer was yakking for a long time with Maria Barcaroma today. It's a climb though, but no turn and looks lower. These are a couple dividend things my brother wanted me to look at. Greg mentioned the Roadhouse. I don't know, came in Friday's high, maybe Footsprint. All right, Kermal, if you'll, there's still no pattern, but these mineral stocks. Vic Alarm, Vic, nice. Bertram Yachts. That new alarm, 77. Whoa, Diamond's IWM. That's what you call an erection bar on the 5-minute chart. Man. What's getting them? Wow, Goldman up 16. Even though banks gap down. There you go. There you go. Sam, I don't know if you're here. You know how we always talk about continuation shakeout patterns? That's exhibit A. It went down, took out all those lows, and then was a closing breakout. Not a great void though. But I would do a put spread on that. That could have been I don't like trading the first 5 minutes, but that was a nice scalper on the 15-minute chart. So yeah, we should be scanning the banking sector. Let's see, Alex said Burger King. Burger King, yeah, let's watch a pullback. And that would be a no-brainer put spread. Q's falling hard here. Microsoft, Tesla, Netflix, all breaking down on the 15-minute chart. Still out. Yeah, I got out of my pre-market at a great price. My SLV. Yeah, I'm not chasing. I was hoping for 1, 2, 3. XLRE. Man, we did a half lot on that yesterday. Bar by bar. That's not what it's supposed to do. MDT alarm looks great. MDT looks great. Home Depot up alarm. We have a put spread. Cake just triggered.